All right, Bulls and Bears, we're back with another dose. A lot of new recent economic financial developments. We have inflation, the numbers are out, and things just got worse. In other words, prices are still going up. I'm going to tell you how that was spun by the media here in just a minute. We've got a lot of other news to get into. Please make sure you're subscribed. Let's go ahead and get started right here. Now, here's how they phrased it over at CNN. Inflation cooled to a 6-month low in March, but tariff pressures are quickly mounting. Tariffs. Now, we have not yet seen the impact of tariffs. This is from March. What happened is a lot of companies, especially the big retailers, they front-loaded their inventory knowing the tariffs were coming. So we may not actually see the implications of the tariffs until the full month of April numbers are out, and maybe even into May. We'll have to see how it plays out. But the bottom line is, folks, prices are still up year over year. Even if inflation cools, doesn't really mean much. It just means prices are still going up, just at a slower pace than previously, which really doesn't help anybody, right? It's better than prices going up faster, right? Slower price rises are better than faster price rises, of course. But the bottom line is prices are still rising. We don't need that. We need deflation. We need prices going down. We need falling prices. We need a correction. When things get overvalued, when things get overbought, when things are too expensive, we need a correction. You've heard that term probably a lot, right? A correction. The economy needs a correction. The stock market needs a correction. Home prices need a correction. The cost of cars need a correction. The cost of food needs a correction. Everything is overpriced, overvalued, overbought. So I don't know how any other way to put it. Maybe you can let me know down in the comments how you would phrase this. But a 6-month cooling inflation, great. I mean, a 6-month low in inflation rising is what it is, but it's still not good. Let's go over to some of the numbers, though, from this latest inflation report. And while it is true that CPI fell from 2.8 in February to 2.4 in March, it's still a positive number. And let's go over to CNBC to show you some of these categories here on some of the price rises. Eggs still up 60% year over year. Coffee 13%. Ground beef 9 and 10%. Juices and drinks 6%. Butter. So most food items are more expensive, folks. Even vending machine foods 6.7%. Energy up 9.4%. Electricity up 2.8%. And now let's get into some of the entertainment numbers, folks. This is crazy. Admission to sports events up 25% year over year. People are still paying these ticket prices to watch these millionaires throw balls around. They're paying 25% more than last year, even with all the debt right now. That shows you how, I think crazy and how out of touch the U.S. consumer is right now. 25%. Rental of video games and videos. I'm not sure who still rents, but up 10%. Laundry equipment up 8%. Cigarettes up almost 8%. Motor vehicle insurance 7.5%. But the big one, I can't get over this one. Admission to sporting events 25%, folks. We have people in the U.S. paying their hard-earned money to watch athletes throw a ball around, right? Nothing wrong with that. I've been to some sporting events in my day. But the fact that people are still paying these high prices and at 25%, this is one of the worst inflation areas outside of eggs. This is one of the biggest inflation areas of all the categories here. Sporting events up 25%. This is crazy. Right? And I just want to make it clear, I'm not criticizing anyone who spends money on going to sporting events, right? Entertainment's one of the biggest things that people spend their money on, right? People are looking for something to get their mind off of their problems, whether it's music, entertainment, sports, movies, right? All these entertainment things, built multi-billion-dollar industries, each one of them, right? Nothing wrong with people that do that. I do it. I spend money on music each month. I have a streaming subscription for music, right? But the cost of these tickets, folks, concert tickets included, I stopped going to concerts a long time ago when they raised the prices. I'll still go to small events, small venues and stuff like that. But these ticket prices are outrageous, folks. And let me just give you an article here before we move on. Let me give you a statistic here before we move on here. And it's about how much these athletes make. Check it out, people. Major League Baseball players may have $1 billion ball player by 2030. That's how much their salaries are increasing because people are willing to spend whatever. You charge $500 for a ticket to watch a guy throw a baseball, and somebody else hopefully hit the baseball. And if it's a no-hitter, they may not even hit the baseball if it's a no-hitter. Folks, $1 billion salary by 2030. In 2019, Bryce Harper signed what was then the largest Major League Baseball deal in history, a 13-year, $330 million contract with the Phillies. That record lasted mere weeks before Los Angeles Angels' Mike Trout inked a 12-year, $426 million deal, folks. This is insane. And on one hand, you feel sorry for people that, we know most people are living paycheck to paycheck. How many paycheck to paycheck people, though, are spending money on stuff like this? It's very interesting to me to look into this. All right. And this comes along with news that there's going to be a massive hunger problem in the U.S. The cuts hit struggling food banks, risking hunger for low-income Americans. Right? Some people have money to just give to million-dollar athletes, multi-million-dollar athletes, and some people don't even have food and they have to rely on food banks. And some people, they will entertain themselves right into bankruptcy. I've seen it happen, right? Good friends of mine, Las Vegas, at least 3 times a year, sometimes 4 times a year if there's special events or concerts. 3 to 4 times a year minimum, Las Vegas. Ended up filing bankruptcy a few years ago, right? And they ended up moving from California to Minnesota. And would they have been able to afford California if it weren't for all the trips to Vegas? Who knows? But I'm saying that bottom line is people will entertain themselves into debt and bankruptcy. All right, but let's get into the stock market a little bit before I want to touch on some other economic news here. The stock market down today. It was up big yesterday. It was down big the day before that. We're seeing this whipsaw movement in the stock market, and we're going to talk about a couple of the indices here. We got Dow Jones down over 1,000 points today. That represents 2.5% drop. Got S&P 500 down over 3%. That's a 188 drop there. That's even a bigger loss than the Dow Jones. 3.4%, folks. Look at this monthly chart here. Wow. Even a weekly chart is going to make it more pronounced. And folks, we see this type of volatility before big economic corrections and downturns and even recessions. We see this volatility at the peak of the market, right? We see the recovery. They try to push it back up. Who knows who's behind the scenes trying to push this back up? If it was the people that were scared of the tariffs, then why are we seeing these big bounce days, right? If it was just the investors that sold off the day before, is it the same investors that are buying back the next day? That doesn't make any sense, right? There's an unseen force that's pushing these markets up. I think most of you know all about that by now. Moving on here, folks, we just saw the chart at the beginning of the video about egg prices still up 60% year over year. Well, prices still going up. They hit a record high, so not just year over year. They hit $6.23 per dozen. That's a new record, despite the talk of bringing prices down. And I think I went to the store and saw them about $7. There's still a couple stores you can get them at about $4. But this is talking about the average here, over $6 a dozen. So where's the price corrections, folks? Even without all the cullings of all the birds that we've seen, prices are still staying very elevated. All right, moving on here, folks. With the volatility and all the big swings in the markets, we're seeing a lot more people now looking at these financial news channels. Market chaos fuels viewing spike for cable business channels, and that's out of the Hollywood Reporter. It's interesting that people really kind of take a hands-off approach until they see their 401k start dropping, and then all of a sudden they want to pay attention. But the thing about this, I think it's interesting that a lot of people are realizing that only a few words that come out of someone's mouth can move the markets and can drop your retirement by thousands of dollars just by somebody talking, just by a leader, a president, a person getting up there and saying a few words about tariffs or this or that. Words move the markets. Isn't it crazy? If the central bank were to come out tomorrow and say they're going to drastically cut rates, the markets would go crazy higher. And if they came out, and they would never do this, but if they came out and said, oh, we're going to really ramp up rates to 10%, markets would crash. Isn't it crazy how at risk your portfolio is if you're in the markets? How at risk your portfolio is based on one person or maybe 2 people saying a few words. It's insane. Real quick here, with all this market volatility, though, that's one of the reasons why we're seeing this flight into safety, which is basically precious metals and gold, what people perceive as safety. Gold, another all-time high, $3,202, folks. So it's continuing to move up as we said it would. If you got into gold when we first started talking about here on this channel, you probably almost tripled your money. Pretty interesting. And it's not hard to get on that. Just buy a quarter ounce. Now I wouldn't be buying now. I'd wait for a pullback, but that's just me. Maybe it'll keep going up, but usually you always see some sort of pullback after a big run up. So I would hold off. If it were up to me, I would hold off on buying more gold. And some of you aren't into gold at all. I get it. Maybe buy a gold stock if you think it's going to go up. Gold miner stocks typically move up with it. Not always, though. You have a lot of research done on that. I still hold my gold stocks from several years ago. Some of them have doubled in value, and some of them did better than the increase in the actual cost of gold. Some of them did worse, right? So it's pretty interesting how some of the different gold miners move differently compared to the price of actual gold. But even with all the people going to give their money to multi-million-dollar athletes, debt stress is growing cracks in household finances. People are still spending money, yes, but the cracks are getting bigger. The debt is accumulating higher, and the defaults, the delinquencies continue to increase. And here's how they put it over at Axios. The number of people falling behind on debt payments has risen sharply, even though households collectively built up their holdings of liquid assets at the end of last year, wrote Samuel Toombs, an economist at Pantheon Macro, in a new note. Folks, we know that this is mostly borrowed money. The savings rate is not really increasing. We look at the charts on it. The money being spent is borrowed money. Yes, people have a lot more equity in their homes because home prices are going up. But people are not going to be able to see that equity unless, one, they take out a cash refinance, which a lot of people aren't doing with mortgage rates where they're at right now. Refinances are down. Or two, if they sell their home. And if enough people sell their home, then you're going to start seeing prices come down. But there's not many cheaper alternatives as far as renting goes. So another reason why a lot of people are not selling their homes right now. Now, something that's very interesting, and we had this video we talked about yesterday. This is an image from the video talking about what the average U.S. worker would look like trying to do the jobs that are manufacturing jobs that are in some of these Asian countries right now. And that's not that's an AI image, but it's pretty accurate. I think Americans would have a tough time adapting to that type of work, right? And a lot of people say it's going to be mostly robotics, that you won't even have a lot of people actually doing these things. But when it comes to like sewing and manufacturing and assembling electronic components, real small components and clothing and stuff like that, it's still a lot of people. If you look at the factories and the production, it's still a lot of people that are employed at these factories, and they haven't been replaced with robots yet. Not completely, but it's headed in that direction. So I could see why people would say it's going to be all robots. But something very interesting just came out that the people being laid off right now, a lot of the federal workers, could be the ones taking these factory jobs if factories come back to the U.S., and I think that's going to be a stretch. And I would be shocked if very many jobs actually came back to the U.S., considering the cost of living and how expensive everything is, and how much more wages they're going to have to pay, and how much higher health coverage they're going to have to pay, because healthcare here in the U.S. is one of the most expensive places in the world to have health coverage. You know what I mean? So if you have employer-based benefits, the employers are going to have to pay more for everything: the wages, the healthcare, you name it. The building leases are more expensive here in the U.S. Everything's more expensive here compared to most other countries. All right. Now, there's a huge variation, though, depending on where you're at in the U.S. If you open up shop in California, drastically different than opening up shop in Tennessee, in Texas, some of these lower-cost states. So if manufacturing does come back, I see it coming back to certain areas of the United States, the low-cost areas, the Rust Belt, right? And maybe that's where a lot of the blue-collar type of people will be based out of. But what they're saying is that a lot of federal workers are going to be the ones taking these jobs. And here's how they put it over at the Hill. Besant, that's a Treasury Secretary. Federal layoffs will help fill factory jobs created by the tariffs. So can you imagine going from a federal job to working in a factory? I mean, maybe it's still pretty good pay, But I'm sure a lot of these people, if you ask them to choose between working at a factory and having their federal job back, they would prefer the federal job. And this article goes on to talk about how the U.S. economy basically was a facade because it was propped up so much by federal jobs and federal spending that it really wasn't a healthy economy. And they equated it to a bodybuilder or athlete on steroids. On the outside, they look good, they look strong, they're performing, they're competing at the highest level they've ever competed, but they're taking these enhancing performance drugs, in this case steroids, but they're not healthy on the inside. They're killing their organs. Even though they look better on the outside, that's the economy. It looked good when you look at the job numbers, right? Jobs increased because of these federal jobs, but it was based on the open-ended credit card and basically the country going into deeper and deeper debt. All right, people, moving on here. A couple other things to touch on before we get out of here. Housing market, folks. Housing bubble. Will we see a turning point? We do see inventory now rising, and inventory is the highest it's been in about 4 years. And if it continues, it's going to be the highest that we've seen since about 2012. We're going to get more into that. But recent news here about buyers backing out of deals. Tariff-spooked home buyers are already backing out of deals. Liquidity concerns, market volatility caused some buyers to halt contracts. And when you're buying a home, if you're going to let something like a tariff make or break your decision to buy a home, you probably should think twice about buying a home. If you're worried about the cost of goods from China going up 20%, well, maybe 100%, based on the most recent China tariffs, that's going to change. It's not going to stay at 100%. But if you're worried about tariffs bringing up the cost of goods and products, and you're using that as a decision to buy your home, you probably better be careful about buying a home because it sounds like you're over leveraged. And if prices do go up and we see these tariffs stick, or even inflation without tariffs, you're going to be in trouble if you're, concerned about these tariffs and your ability to make your mortgage payment. Right, other news here, folks. Weight Watchers preparing to file for bankruptcy. There's a company that's been around for years. They used to have little frozen foods that they put out, and they had programs that people could follow and calorie counting and stuff like that. So now it's going to be people won't have to watch their weight or count their calories because with the food bank situation, they're going to be forced to. So maybe that's why, I'm joking, but am I? Maybe I'm not. Maybe that's why Weight Watchers went out of business, because the food banks now, all the cuts, and we talked about the news reports that said there's going to be a massive starvation situation spreading across the U.S. So maybe now people are going to be forced to watch their weight or watch their weight drop because they won't have any food because of the food bank cuts and the funding cuts. What else here? We got Amazon canceling some orders of goods made in China because of the tariffs. So will we start seeing shortages with the cancellations of orders? It's going to be very interesting. Maybe it's going to be a 2020 type situation where we're going to see shortages and therefore drastically rising prices. Or are all these news outlets and all these economists and all these political talking heads that are against or speaking out against the current situation, are they incorrect? Are we going to see deflation? Well, the latest inflation report that we talked about at the beginning shows prices are still going up. Yes, more slowly, but prices are still going up, right? So what's it going to be? And the stock market, are you in? Are you buying this? Because we saw another dip today, which is possibly another buying opportunity. Or is this thing going down, folks? Is this the Titanic, and they're just rearranging chairs on the deck to make it look nicer, but it's going down? We see this volatility before big market downturns. Let me know what you think about all this, folks. Are you investing or are you sitting back? I'm mostly sitting back. I did a small trade the other day, kind of a what they call a scalp trade, in and out, because of the big drop, and then it went up. Maybe today will be another opportunity, folks, but I'm still being very cautious, not going too deep into this market right now. Anyways, let me know what you think about all this down in comments, folks. As always, keep stacking. Bye for now. Talk to you later. Peace.